You're listening to the Values and Leadership Podcast, where business leaders share their stories of purposeful impact and success.
Hello and welcome to the Values and Leadership Podcast, a podcast for innovative leaders who want to apply new ways of doing things in work and deploy their talents and time to earn their legacy every day. I am your host, Ahmed Arif.
I invite corporate owners, corporate leaders, academics, and advisors who practice participative leadership and love to share their positive life and business experiences, their sense of direction, sense of meaning, and how they challenge their thinking in growing their business and the people around them to their next best stage. Today, we have a special guest. We have Dave Bookbinder, a valuation expert, best-selling author, speaker, a go-giver, a host of Behind the Numbers podcast. He is collaborating with CFOs, CEOs, private equity, and their trusted advisors on valuation, projects, and assignments. Dave writes about finance, leadership, and the value of people as a contributor at tlnt.com, CFO University, Thrive Global, and the Enterprise Engagement Alliance. He is also a former contributor to the business section of the HuffPost. Hello and welcome to the show, Dave.
Hi, thanks so much for having me. Great to be here.
Great. I think you are in Philadelphia, Pennsylvania, United States.
Yeah, Philadelphia. Grew up in the great Northeast for anybody who's familiar with the Philadelphia area.
Northeast.
Northeast Philadelphia.
Northeast Philadelphia, okay.
Northeast Philadelphia, yeah. For those folks in the Philadelphia area who are listening, they'll know what I'm talking about.
Great. Dave, you have a great philosophy in business, and you are trying to bring new insights into business. So one of them is in your title. You name yourself as a go-giver. So how go-giver you apply it in your work?
Yeah. So are you familiar with the book The Go-Giver by Bob Berg and John David Mann?
Yes.
Yeah, so that was an inspirational book for me. And I've always, I think, basically conducted myself in a fashion that was consistent with being a go-giver. But a few years back in taking on a specific role, I really employed that as a business strategy more so than just a life strategy. And it really is about just putting the needs of others first, seeking to understand, looking to add value. And as Bob would say, the money and the compensation and the business opportunities that come from that really just are an echo to your value creation. So it's just a matter of behaving in a certain fashion where you're putting the needs of others first. That's what really being a go-giver means.
Great. How do you reflect that as a business practice? How do you reflect that in your evaluation practice, in your authoring, or in your podcasting?
Yeah, well, I think it's really a much broader thing. Like I said, it's sort of a life philosophy, but when I think about applying it to business, it's applicable for anyone who's listening. So if you're ever going to be working with a prospect, for example, or a client, a customer, what have you, a lot of times folks are just hardwired to come at the idea of describing their solution. You know, we're the greatest vacuum cleaner company on the planet, so you should buy our vacuum, rather than seeking to understand what the customer's need might be. So when I would speak about this to try and help some of the younger professionals in thinking about how to go about selling or business development, I tell them to come at it from the lens of try and create a friendship with someone. Don't think about pitching. Don't think about selling. Just seek to understand, spend more time listening, asking good questions, and understand what the real needs are, because they may or may not need your service or product. You're certainly not going to make anyone buy or hire you based on your pitch. It's a matter of making sure that they understand that you care about them. And once you can build that rapport and really truly understand what their needs are, then the solutions can be better identified. And if there's a good fit, then there's a good fit. And if it means you refer them to somebody else who can be of greater help to them, that's a good thing too, because you're adding value and they'll remember that.
Great. So not focus on the pitch, create friendship, seek to understand, ask good questions, know the people needs, and see if there is a match between their needs and what you can offer them. Then there is a business. If not, there is no.
Yeah, I recently actually was fortunate enough to have Bob Berg as a guest on my show on Behind the Numbers. And he said that he would like to eliminate the word pitch from the lexicon of every business development professional on the planet if he could.
What alternative is he providing? The same that you just mentioned?
He describes it as a serve. Go-givers don't pitch because when you think about the idea of a pitch, it's kind of a baseball term, and the idea of pitching is to strike the batter out. So Bob described it in the interview with him as more of a friendly serve in a game of friendly game of tennis, where you serve the ball over the net so that they can hit it back to you, and then that's the dialogue.
Great. You have an interesting article on your LinkedIn. You mentioned it's all about valuations. Can you explain that further?
Oh, in the Shark Tank, it's all about valuation.
Yep.
Yeah. So that was the second article that I'd ever written. And it was an interesting springboard for me. So I'd always wanted to blog or write, but I wasn't sure what I wanted to write about. And I was talking with some friends and colleagues, and they said, look, don't put any pressure on yourself. Write a few things that inspire you and kind of put them in the bank so that you have them to roll out whenever you're inspired to do so. And I wrote the first piece, and it got some traction. So I got a little bit of confidence and decided that I needed to write something that kind of spoke to my profession to demonstrate, we'll call it the bona fides and valuation. But I'm not a guy who likes to write technical papers. So when I think about how to write about a valuation topic, I thought, well, Shark Tank would be fun. You know, my kids and I sit on the sofa and watch Shark Tank. One of them said to me one day, "Hey, Dad, don't you do that valuation thing?" So when I think about Shark Tank, they took the word valuation and brought it into everybody's living room, and for a brief moment, made what we do sexy. And there's a lot of reasons why companies need valuation, more than just what we have on Shark Tank. But it gave me a great opportunity to explain some of the methodologies that we use in business valuation from the context of a really super popular show that's talking about valuation. And just as a sidebar, that article got a ton of traction and was actually the springboard for my opportunity to start writing for HuffPost in their business section.
Great. And as well, you are as much as you were attracted to this idea that Shark Tank brought the idea of valuation to everybody's home through this show. As well, you are trying to have other messages to the business people, where you are trying to reframe the value of business as a function of how well the financial capital, intellectual capital are managed by the human capital, the people. So this message, or this reframing message, it seems to be like at odds with the current business conventional wisdom. So how do you support your message?
Yeah, and you're absolutely right. And thanks for asking that, because it is a little bit of a divergence. So by all practical matters, I'm what you'd call a numbers guy. And, growing up in the finance community, and what you just alluded to, the value of a business is a function of how well the financial capital and the intellectual capital are managed by the human capital. I always add, so you better get the human capital part right. And a lot of times it's perceived to be more of a traditional HR kind of a message, if you will, not something you typically hear from a finance guy, which is why I think a lot of people thought my message was somewhat unique just based on the kind of individual it was coming from. But the backstory there is, in my experience in business valuation, I also value intangible assets, intellectual property. And one of these intangible assets that we value is people, human capital. And let me just set one frame here first. When I say the words human capital, I want to be really clear that I am not using that in any kind of a negative sense whatsoever. I know there are folks who will pound the table and say people are not assets, they don't belong to the company, and don't call them human capital. I use the term human capital because I generally am speaking to finance professionals. I'm talking to CFOs and CEOs. And if you want to start to think about people as an asset rather than just an expense, I think we need to reframe the conversation and start to think about people in the context as we might any other kind of really important capital inside a business. So the backstory is I was a single dad for probably a dozen years or so, and got to learn about what it was really like to work for some great leaders who led with empathy. And I also had the opportunity to work with some leaders who maybe didn't have quite as much empathy. And I started to really understand the impact on engagement and discretionary effort, and the way a lot of folks perceive people in general is, we are nothing more than expenses, something that should be reduced rather than an asset that should be invested in. And I decided I need to write something about it. And I need to be careful not to throw my profession under the bus, because frankly, this most valuable asset doesn't appear on a financial statement. And I don't think that the methodologies that we use really tell the whole story. And that article caught traction, and it turned into a series, then became a LinkedIn community, and ultimately I had to turn it into a book called The New ROI: Return on Individuals. But I actually never intended to write the book. The book just sort of happened organically as a result of this passion project and my journey in collaborating with about 20 other thought leaders across North America, trying to prove my thesis that really people are an organization's most valuable asset.
Can you give us a deep dive into this return on individuals? Because you mentioned new ROI, return on individuals. Can you please explain more? How do you measure it? How do you go through it?
Yeah, so my lens on this whole topic is that people contribute to the value of a business enterprise. And I do talk about how we in the valuation world value human capital. And I do talk about different ways where maybe we can change the paradigm and how we value it. But I always basically end that with a so what? Nobody cares. And here's why nobody cares. Because right now, human capital doesn't appear on a financial statement. In the valuation world, it gets subsumed into goodwill. And if you want me to get a little bit deep dive here, I'll get a little bit wonky. So the valuation of intangible assets usually happens when a company buys another company. And we're valuing these intangible assets to be recorded on the financial statements at fair value. So there are identifiable intangibles, and the usual suspects that we see are things like technology assets, trademarks and trade names, and customer relationships. Human capital, or the assembled workforce, is valued using a method called the cost to replace. And my issue with that methodology is it basically assumes everybody is identical. We're all fungible, and you can replace any employee with any other employee, and they'll have the same learning curve. They'll bring the same level of productivity, and there's just a cost associated with that. And cost doesn't necessarily translate into value, as you well know. So we value the workforce only as what's called a contributory asset. The idea being that if we're valuing a customer relationship asset, for instance, without an assembled workforce to service those customers, there really wouldn't be a customer relationship asset. So the workforce contributes to the value of that customer relationship. And our workforce valuation is used basically to calculate an economic rent to apply against the customer relationship value. So it's a contributory asset, and that's where it happens. But my lens is beyond changing the way we can think about valuing the workforce, because we can include beyond the direct costs, we can include indirect costs. But more importantly, we can start to weave in what I call the intangible within the intangible and bring in employee engagement, because I think we all agree that an engaged employee is going to be more valuable than a disengaged or a toxic employee. But putting all that wonkiness aside just for a second, I come at it from even a higher lens, and the idea that there's an impact on people on the business enterprise value.
So I think now you are trying to change the perspective of people regarding the humans, because they are not a cost or replace. They should not be falling under the cost or replace, while others intangible, they are reported as a fair value. And the people, I mean the accounting framework setters, they didn't include humans as intangible asset as well. So did you manage to understand their point of view? Why is not included yet into the accounting framework and auditing framework?
Yeah, I mean, it is what it is. I certainly can't change that. You know, the accounting professionals and folks who are certainly much smarter than I am have made that determination. But the good news is I do think that there's a movement afoot, and I do optimistically see change on the horizon. There's a ton of empirical data that certainly I've discovered in my journey in writing the book and continuing to speak on this topic that proves that companies that do the right thing by their employees, invest in their people, treat them like assets, create good cultures, they all outperform their peers. And I think there's metrics that we can garner from new SEC disclosures that were recently announced, and hopefully others that are forthcoming, where we can then correlate the impact of this human capital investment on the business enterprise. And again, that's where my lens is. I think that at the end of the day, when I look down the road, I see human capital on a financial statement as an asset. And I think in the business valuation world, I think we're ultimately going to be able to get some statistics together to do that kind of a correlation and weave it into to get wonky again, the present value factor that we use in using a discounted cash flow model as a company-specific adjustment in thinking about business valuations.
So how do you translate or give this message to the investors?
Well, I just continue to speak on this topic. And again, there are others who do as well. I alluded to some changes that the SEC recently made. Interestingly enough, it was, I think, in August of this past summer, August 2020, in the middle of a global pandemic. So I don't think it should be overlooked that the changes were rolled out in the middle of a pandemic, because as we all know, as we're in the middle of a global, basically shutdown, we had basically the factories not operating. We have barbershops and restaurants not operating. And it became really, really clear that without the people to do the tasks and cut the hair and deliver the food and go into the grocery stores, that everything came to a halt. So I think there was a newfound appreciation for the human capital and for people. Again, ironically, even some of the lowest level, if you will, employees that would impact large amounts of people and in a life-saving fashion, not to even mention the frontline supporters, the doctors, the nurses, and so forth. But I think what's going to happen here is I think the SEC has rolled out their new disclosures. They're not as much as everybody in the HR space would have hoped for, but it's a start. And the other things that you're starting to see too, momentum-wise, are you probably have heard of ESG investing, environmental, social, and governance, where the focus on other stakeholders beyond just investors has gained tremendous momentum. And there's, again, empirical data that shows you can do well by doing good. And I would just point out one other quick thing, because there are a host of studies out there, the best companies to work for, best places to work. There's also an organization called Just Capital, and they track what's just, meaning what's good, good corporate citizenship based on surveys that they do with American citizens. And they created a portfolio of companies that behave in this just fashion. And every quarter, every year, that just portfolio outperforms its peers, as you would expect, based on everything we've already talked about. So a lot of good data around that, and I do foresee change down the road. Maybe I'm just an optimist, but that's my story, and I'm sticking with it.
Great. I share your story. I like this Just Capital. Just Capital is what? Is what company?
Yeah, that is the name of the firm, Just Capital.
I mean, is it the industrial manufacturer or what?
No, they're a research organization.
Research. Okay, great. So they are producing reports, I mean.
Yeah.
Great.
Yeah, and then their research is the basis for the portfolio, the stock portfolio that I mentioned.
Great. Back to your valuation business. You mentioned that you provide your clients with a valuation that is based on collaboration, communication, and responsiveness. And it seems that you find a winning formula for you to combine both collaboration and responsiveness. And responsiveness is the most important thing in business. So how did you manage to do the three of them: collaboration, communication, and responsiveness?
Yeah, I just think they're all connected. I think that in a day-to-day world, it's sometimes easy for folks to get lost in the idea of just meeting deliverables and being the smartest person in the room and cranking something out and sliding it across the table, so to speak. But I think if you're going to build long-term relationships with clients or anybody, it's really about communication. It's really about collaboration and being transparent, maybe sometimes having some difficult conversations, challenging certain assumptions, but doing it in that collaborative fashion where we're all looking to achieve the same goal, but doing it in we'll call it a better way.
What do you think this is the better way that you tried and you find it working?
Yeah, because I think what happens is you wind up building rapport. You wind up building trust, and if you can build trust, then people have confidence and faith in you, and they're more likely to come back to you, and they're also more likely to refer you to others. Again, I think it just dovetails with that whole go giver mantra.
Yeah, it seems that you have a lot of practice you are implementing around this go giver thing.
Yeah, but here's the good news: it's not an effort to implement that. If it's a part of your DNA, and even for those who may be hardwired differently and think, maybe they grew up under different kinds of leaders where there's a lot of quid pro quo behavior, or some folks are characterized more as takers rather than givers. If it isn't wired in you already, it can certainly be learned, and there's certainly benefits to it. And Adam Grant actually wrote a book called Give and Take, where he actually went through the empirical evidence of what it means to be a giver, a taker, or a matcher. And a spoiler alert, at the end of the day, the givers actually are more successful.
Yeah, it seems that if you are an expert like you, so it can be easy to have this thing as a DNA and wired in you. But if you are a manager or a senior manager in a corporate which does not value this kind of go-giver mentality, so how come did you find someone who was successful in implementing this go-giver within the corporate?
Yeah, and it doesn't necessarily even have to be somebody inside your organization. And I would say for the folks who are listening, it doesn't matter where you are on the organization chart. You don't have to be in the C-suite. You don't have to be even in an official leadership position to behave in a go-giver fashion. Even if you're not, we'll call it client or customer facing, you can behave in that way even with your coworkers. Seek to help, seek to understand, seek to add value. Because the really interesting thing is you never know when you're going to meet your next client, your next customer, your next employer. You could be in a grocery store and you're behind someone, and maybe you're in your own world and you're not paying attention to what's going on around you, and an opportunity for a conversation is missed. But maybe if you're a little bit more engaged, maybe if somebody drops something and you pick it up, for example, and you start to have a conversation, you never know where it's going to lead. So it's really just about trying to be a decent human being, treat everybody with respect, and where you can, try to add value in every conversation, because you just really never know what's going to happen.
Mm-hmm. So I like that you stress on have good behaviors and think of it as a personal brand that you want to show to the world. And irrespective of your position, you don't know what kind of situation you may be in, that people will recognize that and people will appreciate that. Correct?
Yeah, exactly. And here's the real interesting thing. Bob Berg talks about it in the Go Giver series. He says that sometimes leads come out of left field where you don't even know where they came from. And I've had that experience in my life. And we talked about it when I had him on the program. And what really happens is every conversation sets a stage for how you're perceived. And if you continue to do the right thing, especially when nobody's watching, right? That's integrity. And you continue just to try and add value, you build a reputation. And whether you're aware of it or not, other folks remember that. They think of that. And I've had folks refer me, folks who I've never even met, frankly, but who have, I guess, heard of my reputation or were told by somebody else, and that trust got transferred. And I'd get leads from folks just because of the pre-paving, if you will, of having done the right thing for so long. So that's where these leads that come out of left field come from, but they really are a result of everything that you've done up until that point.
I know you are hosting as well. You are the host of Behind the Numbers. It's a show that you dig deeper to understand what matters most in business. So, what was your realization? Is there a common pattern between the guests, or is there something that came like an outstanding thing for you that you didn't know before?
Yeah, so funny story. So I was a guest on a couple of shows at an organization called RVN TV when my book came out. And they said to me, "Hey, you seem like an interesting guest. How would you like to have a show?" And then I had to figure out, okay, what do I want to call the show? And Behind the Numbers came to me because it's part of this core philosophy that people are a company's most valuable asset. The idea behind the numbers meant, in my world, everything is measured by the numbers, business valuation, business performance. But we all know that behind those numbers are the stories of real individuals, their trials, their tribulations, lessons learned, what have you. So I don't go into each conversation on the program to talk about, we'll call it the human capital component or the new ROI mantra or anything like that. It's an understanding of how each guest operates in their business, what matters to them and their customers. But the recurring theme or the thread that you're alluding to is always the same. At the end of the day, when these leaders are talking, there's a connection between the culture that they've implemented, the individuals, the employees that they have working with them, and that whole philosophy about how they're treating their people that manifest in better business performance. I've had CEOs tell me straight up that, like, when they got to an organization, for instance, the corporate culture was really, really bad. And in an effort to try and change it, they've had to do things that I would describe as being intentional. You've got to really focus on the idea of instituting change. But as you can imagine, when people who've been inside an organization and been through a bad culture, now someone else comes in and says, yeah, we're going to change it. They don't always believe it right out of the gate. So to facilitate that change, it takes time. And it's anywhere from like 18 months to 24 months before it gets embedded in the DNA of these organizations. But every time they tell me the same story. Once it's embedded in the DNA, once everybody believes that this is not just a new fad and that we're very serious about our culture, all the key performance indicators increase. So profitability, sales, retention, turnover decreases, safety goes up, everything you can imagine that's important to driving business value.
Do you recall a common theme of embedding this change as part of the company DNA?
Yeah, it's about being intentional, being consistent. I would say the best way to describe it is one of the CEOs that I interviewed in my first book. He instituted a no a-holes policy, and they enforce it regularly. So imagine that they've got a code of conduct on how everyone is supposed to treat one another with respect and dignity, and a rule book, if you will, on how we as employees are to respond to certain situations to make sure we're living the corporate code and the way we want to behave and the way we want to be known. And anybody who comes into that organization who doesn't conform with that and doesn't play nice and doesn't do the right things, there are consequences for them. And when the employees saw that no a-holes policy was enforced, that was a difference maker, because then they knew for sure, hey, these guys are taking it seriously. This isn't just lip service.
Great. So they had a code of conduct to respect, and they were expecting behaviors from people, and there is a consequences for that of not having this behavior. So this way they managed to embed this change in the DNA.
Yeah, and it just takes time to organically evolve so that folks understand that this is serious, this is real, this is something that the organization is implementing, and it's a strategic imperative, and it's to be taken seriously.
And does this affect the budget of the company? So is there like any kind of financial obligation the company is doing to make this DNA really embedded?
Yeah, and that depends, because I think a lot of times when folks think about a commitment financially for these types of things, you get to the cliche, let's put a pool table in the break room, or let's have beer on Friday afternoons or something like that. And while those things are nice, that doesn't really facilitate culture. So I personally think that you can not even have to necessarily make a financial investment. I think it's more of an emotional investment and a personal investment in the way you treat each individual. Everybody wants to be part of a bigger mission. Everybody wants to be valued. Everybody wants to be understood and appreciated. So if you're a leader and you don't know the names of your employees' kids, if you don't know them on any kind of a personal level, there's a pretty good chance that to some degree they're a little bit disengaged in the way you're treating them. There are certainly investments you can make. Obviously budgets are all different and so forth, but learning, education, those kinds of things are important because people want to learn and grow their skills. And I'm not talking about just the compliance type stuff. I'm talking about things where an employee will actually garner, we'll call it real value from that kind of continuing education.
So leaders do emotional investment, and they do L&D investment in the employees as well.
Yeah.
Great ending for this unusual episode. Thank you, Dave, for the insights. Thank you for getting this kind of ideas within the business, which is not familiar. And thank you for shedding light on the SEC disclosure and the ESG investing focus on stakeholders as well. So this kind of things can create, after some time, new conventional wisdom in business that we are all are proud of in the end.
Yeah, thank you so much for having me and giving me a platform to discuss this with you. If your listeners found any of this that resonates and they're on LinkedIn, there is a LinkedIn group called the New ROI, Return on Individuals, and it's comprised of folks literally around the globe, all levels of organizations, for people who believe what we believe in this philosophy around human capital. So I invite you to join that group.
Great. So I will add this group link in the podcast show notes as well.
Yeah, be a part of the conversation, meet new people.
Great. Thank you, Dave, for this invitation to the group.
My pleasure. Thank you. Stay well.
Thank you very much. Thank you, Dave.